Okay, I wanted to speak a little bit about the U.S. dollar today. It's November 24th, 2015. The dollar trade is getting a lot of talk now. Why? Because the Fed's going to raise interest rates in a few weeks. So the interest rate differential, is going up. Um, the euros are arguably still printing money. The U.S. is stopping to print money, raising rates, so you want to be in U.S. dollars. It's pretty simple. Um, the problem with it, of course, is that it's too simple. It's just not that easy. People that are buying dollars now based on that, I think, are about to get burned pretty badly. It doesn't look like it's happening today, although sometimes these things happen earlier than you think. Um, I just wanted to show a little bit on the positioning stuff. Um, so if you look over here, I know my graphics aren't that great, but I'm going to give this a shot anyway. This is a US dollar chart. It's sort of approaching the March highs, okay, which are over here. Alright, and we're over here now. So we're basically right there. That's pretty much garbage. But if you look at the positioning, for example, on the euro, alright, this is how short specs are on the euro now. Alright, this is where they were back in March. Second week of March is right here. They were this short. So we're not quite there yet. We're about 70% of the way there. But I just wanted to point out that the euro, back in the second week of March, was right here. Okay? Now, we're right there. So, in other words, the euro hit its exact low right as specs are getting mega short the euro, long the dollar. We're getting very close to those levels again. Go back to the positioning thing. Here's the yen. Same story for the most part. This is where the specs got mega short yen. We're looking at the first week of June of this year. Again, we're not quite there yet, but we're on our way. First to second week of June. Let's look at what the yen did. First to second week of June is right here, which is the yen low. Okay, now we're here. We're above that. We're not quite as short as we were there, but we're on our way. All right, the surprising one to me, and I'll get into why it's surprising, but the Swiss franc, which is, this is where they were in January. Okay, this is where they are now. This is the closest one we've gotten to that. The reason I say it's surprising, because as I'm sure some of you remember very fondly, the Swiss franc in January was a fiasco. Okay, there it is, first week of January. All right, when everybody was short Swiss franc, and bang, and put a few people out of business. I think went from 100 to one, it was up 20% in a day or whatever. We're right back to those lows. People are almost as short as they were back then. How they can have the ball sack to do that, again, is a mystery to me. But the bottom line is they're not as short as they were back then when everything bottomed. Not as long the dollar, when the dollar top, but we're getting there. And this data is as of last Tuesday, which is a week ago today. In the last week, we've had nothing but rhetoric about the dollar. You have to be long dollars if you're a macro guy. If you're a trend guy, certainly you have to be long dollars. And I think it's a disaster waiting to happen, that we might be a couple weeks away, because the positioning would indicate another couple weeks. We'll see on Friday when the data comes out, and I'll probably be doing another one of these this weekend anyway, because I'll be pointing out the crowded positioning, and that's where it's going to be. So let's just follow to see where it is at that point. The obvious trade seems to be they'll keep buying dollars all the way up until the Fed actually raises, and on the raise we'll get a failure on the news, and that'll be the end of it. Buy the rumor, sell the fact type of thing. Almost seems too obvious. It seems to me that people that were buying dollars starting yesterday should not make money, ever. Okay? But they may for a little while. They may get comfortable, it will go super crowded, it'll turn, they'll get burned. But what I'm saying is, I would not be involved in this trade, long dollar here. I'm not quite ready to get short dollar. but we're getting real close. So the risk reward is definitely to a flip on the other side. Trade is too obvious. It's too crowded. And again, if you're buying dollar here, I don't know where the hell you've been. Okay, but you're an idiot. So keep an eye on the dollar. Watch out. All right. Be cool.